Question 1. The monitoring system demonstrates a flagged transaction that appears to deviate from established customer risk profiles and transaction patterns. What is the most appropriate initial step for the compliance officer to take? Option A. Classify the alert as a low-priority system anomaly and close the case without further investigation. Option B. Conduct a detailed review of the transaction details, customer information, and relevant internal policies to ascertain the nature and severity of the deviation. Option C. Immediately escalate the alert to senior management for a decision on how to proceed. Option D. Issue a temporary freeze on all accounts associated with the flagged customer until further notice. Correct answer is B. Conduct a detailed review of the transaction details, customer information, and relevant internal policies to ascertain the nature and severity of the deviation. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent tension between operational efficiency and the imperative of regulatory compliance. The monitoring system has flagged a potential breach, requiring immediate and accurate assessment to prevent further violations and mitigate potential penalties. The challenge lies in distinguishing between a genuine compliance failure and a system anomaly, or a minor procedural deviation that does not warrant escalation. Misinterpreting the flag could lead to unnecessary resource allocation, damage to the bank's reputation, or, conversely, overlooking a significant risk. Correct approach analysis. The correct approach involves a thorough, evidence-based investigation that prioritizes understanding the root cause of the flagged transaction. This aligns with the Agricultural Bank of China's commitment to robust internal controls and adherence to relevant financial regulations, such as those governing anti-money laundering (AML) and Know Your Customer (KIC) principles. By reviewing transaction details, customer profiles, and internal policies, the compliance officer can accurately determine if a violation has occurred. This methodical approach ensures that regulatory obligations are met, risks are appropriately managed, and the bank's integrity is maintained. It reflects best professional practice by demonstrating due diligence and a commitment to upholding the law. Incorrect approaches analysis. One incorrect approach is to immediately halt all related transactions based solely on the system alert without further investigation. This fails to acknowledge that monitoring systems can generate false positives. Such an action could disrupt legitimate business operations, negatively impact customer relationships, and demonstrate a lack of critical judgment, potentially violating principles of proportionality and fairness. It also bypasses the established procedures for investigating compliance flags, which is a regulatory failure. Another incorrect approach is to dismiss the alert as a minor system glitch without verifying its validity. This is a serious ethical and regulatory failure. It demonstrates negligence and a disregard for the bank's compliance framework. Overlooking a genuine compliance issue could expose the bank to significant legal penalties, reputational damage, and could be interpreted as a deliberate attempt to circumvent regulatory oversight. A third incorrect approach is to rely solely on the system's automated flagging mechanism, without any human oversight or contextual analysis. While automated systems are crucial for efficiency, they are not infallible. A purely automated response ignores the nuances of financial transactions and the potential for complex scenarios that require human interpretation. This approach risks failing to identify sophisticated compliance breaches or incorrectly penalizing legitimate activities, thereby undermining the effectiveness of the compliance program and potentially violating regulatory expectations for human oversight. Professional reasoning. Professionals should approach such situations by first understanding the nature of the alert and the specific regulatory context. This involves consulting internal policies, relevant laws, and guidelines. The next step is to gather all available data and evidence related to the flagged event. A systematic review, considering potential causes and consequences, is essential. If a potential violation is confirmed, the professional must follow established escalation procedures and remediation protocols. If the alert is found to be erroneous, the system or process that generated it should be reviewed for improvement. This structured decision-making process ensures that actions are informed, proportionate, and compliant with regulatory requirements. Question 2. System analysis indicates that a junior analyst at the Agricultural Bank of China is tasked with a project requiring access to detailed customer transaction data. The analyst believes that obtaining this data directly from a colleague in the operations department who has authorized access would be the most efficient way to complete the project promptly. However, the analyst is aware of ABC's internal policies regarding data access and the broader regulatory framework governing financial institutions in China. Which of the following actions best aligns with regulatory compliance and ABC's internal guidelines? Option A. Interpret internal policies loosely, assuming that for internal projects, direct data sharing between departments is permissible if the colleague has authorized access. Option B. Access the data directly from a colleague in the operations department to expedite the project, assuming the colleague has legitimate access. Option C. Proceed with the analysis using only publicly available or aggregated data, even if it is less precise for the project's needs, to avoid any potential data access issues. Option D. Formally submit a data access request through the established internal channels, clearly outlining the project's objectives and the specific data required, and await approval. The correct answer is D. Formally submit a data access request through the established internal channels, clearly outlining the project's objectives and the specific data required, and await approval. Explanation. Scenario analysis. This scenario presents a professional challenge related to the Agricultural Bank of China's, ABC, internal compliance framework, specifically concerning the handling of sensitive customer information and potential conflicts of interest. The challenge lies in balancing the need for efficient internal operations and data analysis with the stringent regulatory requirements for data privacy, confidentiality, and the prevention of insider trading or unfair advantage. A junior analyst, lacking extensive experience, might be tempted to prioritize immediate data access for a project over established protocols, creating a significant compliance risk. Careful judgment is required to ensure all actions align with ABC's internal policies and relevant Chinese financial regulations. Correct approach analysis. The correct approach involves strictly adhering to ABC's established data access and information handling policies. This means formally requesting access to the necessary customer data through the designated channels, which likely involves obtaining approval from relevant departments, e.g., IT security, compliance, or data governance, and clearly articulating the business purpose for the request. This approach represents best professional practice because it upholds the principles of data security, customer privacy, and regulatory compliance mandated by Chinese financial laws and ABC's internal guidelines. It prevents unauthorized access, misuse of information, and potential breaches that could lead to severe penalties for the bank and reputational damage. Incorrect approach is analysis. An incorrect approach would be to bypass official channels and attempt to access the data directly from a colleague in another department who has legitimate access. This is a direct violation of ABC's internal data security protocols and potentially Chinese data protection laws. It creates a significant risk of unauthorized data disclosure, misuse, and could be construed as an attempt to gain an unfair advantage or facilitate insider trading if the data were market sensitive. Another incorrect approach would be to assume that because the data is for an internal project, standard data privacy rules do not apply. This demonstrates a fundamental misunderstanding of regulatory compliance. Chinese financial regulations, like those in many jurisdictions, impose strict obligations on financial institutions regarding the collection, storage, processing, and disclosure of customer information, regardless of the intended internal use. A third incorrect approach would be to proceed with the analysis using publicly available or aggregated data that does not contain specific customer identifiers, even if it is less precise for the project's immediate needs. While using less sensitive data might seem like a workaround, if the project's objective inherently requires access to non-public, identifiable customer information, this approach fails to address the core compliance requirement for obtaining authorized access to the specific data needed. It avoids the problem rather than solving it through proper channels. Professional reasoning. Professionals at ABC should employ a decision-making framework that prioritizes compliance and ethical conduct. This involves 1. Understanding the specific internal policies and external regulations governing data access and handling. 2. Clearly defining the project's data requirements and the business justification for accessing sensitive information. 3. identifying the appropriate channels and approval processes for data requests. 4. Seeking guidance from compliance or legal departments if there is any ambiguity. 5. Always erring on the side of caution when dealing with sensitive information, ensuring that no action is taken that could compromise data security or regulatory adherence. Question 3. Compliance review shows that a relationship manager is under pressure to onboard a new high-value corporate client quickly to meet quarterly targets. However, the initial due diligence documents provided by the client appear incomplete, and some information regarding the ultimate beneficial owners, UBO, is vague. The relationship manager is considering proceeding with the onboarding, assuming the client will provide further details later. To avoid delaying the business, which of the following actions is the most appropriate professional response in this situation? Option A. Request a limited set of additional documents from the client that are easily obtainable, deeming it sufficient for initial onboarding. Option B. Proceed with onboarding the client immediately, requesting the remaining documentation from the UBOs after the account is opened. Option C. Escalate the matter to the AML Compliance Department for further review and guidance before proceeding with onboarding. Option D. Reject the client outright due to the incomplete documentation and perceived vagueness of UBO information. The correct answer is C. Escalate the matter to the AML Compliance Department for further review and guidance before proceeding with onboarding. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between business development goals and the stringent requirements of anti-money laundering (AML) regulations. The pressure to onboard new clients quickly can lead to shortcuts, potentially compromising the thoroughness of customer due diligence (CDD), and increasing the bank's exposure to financial crime risks. The need for swift decision-making must be balanced with meticulous adherence to regulatory mandates. Correct approach analysis. The correct approach, which involves escalating the situation to the AML Compliance Department for further review and guidance, represents best professional practice because it prioritizes regulatory adherence and risk mitigation. This action ensures that a specialized team, equipped with the expertise to interpret and apply AML regulations, makes an informed decision. It demonstrates a commitment to the Agricultural Bank of China's internal policies and the People's Bank of China's (PBOC) regulatory framework for AML, which mandates robust CDD and suspicious activity reporting. This proactive escalation prevents potential breaches and protects the bank from regulatory penalties and reputational damage. Incorrect approaches analysis. One incorrect approach is to proceed with onboarding the client without further verification, citing the urgency of the business opportunity. This is a direct violation of AML regulations, specifically the requirements for adequate CDD. It exposes the bank to significant risks, including facilitating money laundering or terrorist financing, and would likely result in severe penalties from the PBOC. Ethically, it represents a failure to uphold the bank's responsibility to prevent financial crime. Another incorrect approach is to request minimal additional documentation from the client that does not fully satisfy the CDD requirements, believing this is a sufficient compromise. While it attempts to address the verification need, it falls short of the regulatory standard for obtaining sufficient information to understand the nature of the client's business and the expected activity. This approach still carries a high risk of noncompliance and potential financial crime facilitation, as it does not provide a complete picture for risk assessment. A third incorrect approach is to reject the client outright without consulting the AML department, based solely on the initial perceived risk. While risk aversion is important, a blanket rejection without proper assessment and escalation might miss legitimate business opportunities and could be seen as an overly cautious stance that hinders business growth unnecessarily, potentially not aligning with the bank's risk appetite framework as determined in consultation with compliance. Professional reasoning. Professionals in banking must adopt a risk-based approach to compliance. When faced with a situation where business objectives conflict with regulatory requirements, the primary duty is to uphold the law and internal policies. The decision-making process should involve 1. Identifying the potential regulatory or ethical conflict. 2. Assessing the level of risk involved. 3. Consulting relevant internal policies and regulatory guidance. 4. Escalating the issue to the appropriate department, e.g., compliance, legal, for expert advice and decision-making. 5. Documenting all actions and decisions taken. This structured approach ensures that decisions are informed, defensible, and aligned with the bank's commitment to integrity and regulatory compliance. Question 4. Governance review demonstrates that a junior relationship manager, under pressure to meet quarterly lending targets, has identified a pattern of minor deviations from established Know Your Customer (KIC) procedures in a series of new client onboarding processes. These deviations, while not immediately resulting in a breach of anti-money laundering (AML) regulations, represent a departure from the bank's internal policies and best practices for client due diligence. The relationship manager is concerned about the potential implications, but also hesitant to report the issue, fearing it might negatively impact their performance review and the team's overall target achievement. What is the most appropriate course of action for the junior relationship manager? Option A. Immediately escalate the identified deviations to the bank's compliance department and their direct supervisor, providing a detailed account of the observed patterns and potential risks. Option B. Continue with the current practices, focusing on meeting the lending targets, and only address the KYC deviations if they are explicitly flagged by an external regulator during an audit. Option C. Attempt to rectify the identified deviations discreetly within the existing onboarding processes without formally reporting them, assuming the issues are minor and unlikely to be detected. Option D. Document the deviations internally for personal reference, but refrain from reporting them to avoid potential repercussions on personal performance and team targets. The correct answer is A. Immediately escalate the identified deviations to the bank's compliance department and their direct supervisor, providing a detailed account of the observed patterns and potential risks. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between achieving business objectives and adhering to stringent regulatory compliance requirements. The pressure to meet targets can incentivize shortcuts or overlooking minor deviations, which, if unchecked, can escalate into significant compliance breaches. The challenge lies in balancing commercial imperatives with the absolute necessity of upholding regulatory standards, demanding a proactive and principled approach from employees. Correct approach analysis. The correct approach involves immediately escalating the identified issue to the relevant compliance department and senior management. This aligns with the Agricultural Bank of China's (ABC) internal policies and the regulatory framework governing financial institutions in China, which mandate robust internal controls and reporting mechanisms. Prompt escalation ensures that the issue is addressed by those with the authority and expertise to investigate, rectify, and implement preventative measures, thereby safeguarding the bank from potential penalties, reputational damage, and systemic risk. This demonstrates a commitment to transparency, accountability, and adherence to the rule of law, which are fundamental ethical and regulatory obligations for all employees. Incorrect approaches analysis. One incorrect approach involves attempting to rectify the issue independently without proper authorization or consultation. This bypasses established internal control procedures and could lead to an incomplete or incorrect resolution, potentially exacerbating the compliance breach or creating new ones. It fails to involve the designated compliance function, which is a direct violation of internal reporting protocols and regulatory expectations for a structured approach to compliance management. Another incorrect approach is to ignore the deviation, assuming it is minor and unlikely to be detected. This constitutes a serious ethical and regulatory failure. It demonstrates a disregard for the bank's compliance obligations and the potential consequences of non-compliance, which can include significant fines, sanctions, and damage to the bank's reputation. This passive approach undermines the integrity of the bank's control environment and exposes it to undue risk. Further incorrect approach is to only address the issue if it is directly raised by an external regulator. This reactive stance is fundamentally flawed. Regulatory frameworks emphasize a proactive approach to compliance, requiring institutions to identify and address potential issues internally before they are discovered by external parties. Waiting for regulatory intervention signifies a failure to implement effective internal monitoring and risk management systems, which is a critical deficiency in the eyes of regulators. Professional reasoning. Professionals in the banking sector must adopt a risk-aware and compliance-centric mindset. When faced with potential regulatory deviations, the decision-making process should prioritize adherence to established policies and procedures. This involves 1. recognizing the potential compliance risk. 2. Consulting internal policies and relevant regulations to understand the implications. 3. Escalating the issue through the designated channels, e.g., Compliance Department, Supervisor, for expert assessment and action. 4. Cooperating fully with any subsequent investigation or remediation efforts. This structured approach ensures that all actions are taken within the bounds of regulatory requirements and ethical conduct, fostering a culture of compliance and integrity. Question 5. Compliance review shows that a new wealth management product is being fast-tracked for launch by the Agricultural Bank of China, with a strong emphasis on its innovative features and potential for high returns. The product development team has provided preliminary information, but a comprehensive risk assessment covering all potential exposure areas has not yet been completed due to tight deadlines. What is the most appropriate approach for the bank to take in this situation? Option A. Rely on the product development team's assurances regarding the product's safety and market viability, and proceed with the launch based on their qualitative assessment. Option B. Prioritize the assessment of credit and market risks, as these are typically the most significant for wealth management products, and defer a detailed review of operational and compliance risks to a later stage. Option C. Proceed with the product launch as planned, with a commitment to conduct a post-launch risk assessment and implement controls as issues arise. Option D. Halt the product launch until a thorough and documented risk assessment, encompassing all relevant risk categories and mitigation strategies, is completed and approved by the relevant risk committees. Correct answer is C. Proceed with the product launch as planned, with a commitment to conduct a post-launch risk assessment and implement controls as issues arise. Explanation. Scenario analysis. This scenario presents a challenge in balancing the need for robust risk assessment with the practicalities of a rapidly evolving market and the bank's strategic objectives. The pressure to quickly approve a new product, coupled with potential information gaps, necessitates a careful and systematic approach to risk identification and mitigation, rather than a superficial or reactive one. The professional challenge lies in ensuring that the risk assessment process is thorough and compliant, even under time constraints and with incomplete data, without compromising the bank's financial stability or regulatory standing. Correct approach analysis. The correct approach involves a comprehensive risk identification and assessment process that considers all relevant risk categories, including credit, market, operational, and compliance risks, specific to the new product. This includes developing appropriate risk mitigation strategies and establishing clear monitoring mechanisms. This aligns with the Agricultural Bank of China's internal risk management guidelines and relevant People's Bank of China (PBOC) regulations, which mandate a proactive and holistic approach to risk management for new financial products. It ensures that potential adverse impacts are understood and managed before the product is launched, safeguarding the bank's assets and reputation. Incorrect approaches analysis. One incorrect approach would be to solely focus on the potential revenue generation of the new product, without adequately assessing the associated risks. This represents a failure to adhere to fundamental risk management principles and regulatory expectations, potentially leading to significant financial losses and reputational damage. It ignores the PBOC emphasis on prudent risk management, and could be seen as a violation of internal control policies. Another incorrect approach would be to rely heavily on anecdotal evidence or the opinions of a few key stakeholders without conducting a formal, data-driven risk assessment. This is professionally unsound as it lacks objectivity and a systematic basis for decision-making. It fails to meet the requirements for due diligence and could expose the bank to unforeseen risks that were not properly identified or quantified, contravening the principles of sound banking practice and regulatory oversight. A third incorrect approach would be to postpone a thorough risk assessment until after the product has been launched, citing time pressures. This is a reactive and irresponsible stance that directly contradicts the principles of proactive risk management. It significantly increases the likelihood of encountering unmanaged risks, potentially leading to regulatory sanctions and financial instability, and demonstrates a disregard for established risk management frameworks and compliance obligations. Professional reasoning. Professionals should adopt a structured, risk-based approach to new product development. This involves establishing a clear framework for risk identification, assessment, mitigation, and ongoing monitoring. When faced with time pressures, the decision-making process should prioritize the integrity and effectiveness of the risk assessment, even if it requires a slight delay in product launch. This involves engaging relevant risk management specialists, utilizing available data and analytical tools, and documenting all risk-related decisions and justifications. The ultimate goal is to ensure that new products contribute to the bank's profitability while remaining within its risk appetite and complying with all applicable regulations. Question 6. Quality control measures reveal that a new innovative digital lending product is being prepared for launch by the Agricultural Bank of China. The product targets a segment of the market previously underserved by traditional banking channels, offering potentially high returns, but also introducing novel operational and credit risks. Which of the following approaches to assessing these risks best aligns with the regulatory framework and internal guidelines for the Agricultural Bank of China? Option A. Delegate the entire risk assessment process to the product development team, trusting their expertise to identify and manage all associated risks without requiring formal sign-off from other control functions. Option B. Conduct a thorough risk assessment that includes scenario analysis and stress testing for credit, market, and operational risks, involving input from the compliance, legal, and IT departments, and document all findings and proposed mitigation strategies for senior management review. Option C. Focus the risk assessment on the projected revenue and profit margins, with a cursory review of potential risks, assuming that the innovative nature of the product will inherently overcome any significant challenges. Option D. Rely primarily on historical performance data from similar, but not identical, loan products to estimate potential losses, assuming that past trends will accurately predict future outcomes for this new offering. The correct answer is B. Conduct a thorough risk assessment that includes scenario analysis and stress testing for credit, market, and operational risks, involving input from the compliance, legal, and IT departments, and document all findings and proposed mitigation strategies for senior management review. Explanation. The scenario presents a challenge in risk assessment where a new product launch, while potentially lucrative, carries inherent uncertainties that require a robust and compliant evaluation process. The professional challenge lies in balancing the pursuit of business growth with the imperative to adhere to the Agricultural Bank of China's (ABC) internal risk management policies and relevant Chinese banking regulations. A superficial assessment could lead to underestimation of risks, potentially exposing the bank to financial losses and regulatory sanction. The correct approach emphasizes a comprehensive, multifaceted risk assessment that integrates quantitative and qualitative analysis, considers various risk categories, credit, market, operational, liquidity, compliance, and involves cross-departmental collaboration. This aligns with the principles of prudent banking and the regulatory expectations for financial institutions in China to maintain sound risk management frameworks. It demonstrates a commitment to identifying, measuring, monitoring, and controlling risks effectively, thereby safeguarding the bank's financial stability and reputation. An incorrect approach that relies solely on historical data without considering the unique characteristics of the new product or market conditions fails to adequately address emerging risks. This could violate regulatory guidelines that mandate forward-looking risk assessments and stress testing. Another incorrect approach that prioritizes potential profit over thorough risk identification and mitigation overlooks the fundamental duty of care and the regulatory requirement for a risk-averse culture. This could lead to breaches of internal policies and potentially Chinese banking laws concerning risk management. An approach that delegates the entire risk assessment to a single department without adequate oversight or input from other relevant functions creates a significant operational risk and a lack of accountability, which is contrary to best practices and regulatory expectations for robust internal controls. Professionals should adopt a structured decision-making process that begins with clearly defining the scope of the risk assessment. This involves identifying all potential risk categories relevant to the new product. Next, they should gather relevant data, both internal and external, and apply appropriate analytical tools, ensuring that assumptions are clearly documented and validated. Crucially, the process must involve consultation with subject matter experts from various departments, including compliance, legal, operations, and finance. The findings should be documented comprehensively, and mitigation strategies should be developed and approved by appropriate governance bodies before the product is launched. This systematic and collaborative approach ensures that risks are understood, managed, and reported in accordance with regulatory requirements and the bank's risk appetite. Question 7. Operational review demonstrates that the Agricultural Bank of China's current risk assessment framework has been in place for several years. Given recent shifts in the global economic landscape and evolving regulatory expectations for financial institutions, which of the following approaches would best ensure the framework's continued effectiveness and compliance? Option A. Rely predominantly on historical performance data to validate the existing framework's efficacy, assuming that past success indicates future resilience against known and predictable risks. Option B. Prioritize the rapid deployment of updated risk assessment tools based on readily available industry best practices, with a secondary focus on retrospective data analysis to confirm past performance. Option C. Focus primarily on benchmarking against peer institutions' risk assessment methodologies to identify areas where the bank lags, and implement similar controls without extensive internal validation. Option D. Conduct a thorough evaluation of the framework's design and operational effectiveness, incorporating forward-looking scenario analysis and stress testing to identify potential vulnerabilities and areas for enhancement in light of emerging risks and regulatory changes. Correct answer is D. Conduct a thorough evaluation of the framework's design and operational effectiveness, incorporating forward-looking scenario analysis and stress testing to identify potential vulnerabilities and areas for enhancement in light of emerging risks and regulatory changes. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires the assessment of a new risk management framework's effectiveness in a rapidly evolving regulatory and market environment. The challenge lies in balancing the need for robust risk controls with the imperative to remain agile and competitive, all while adhering to the specific regulatory expectations of the Agricultural Bank of China, ABC. Misjudging the adequacy of the framework could lead to significant financial losses, reputational damage, and regulatory sanctions. Correct approach analysis. The correct approach involves a comprehensive, forward-looking assessment that considers not only current regulatory compliance, but also the framework's ability to adapt to future risks and technological advancements. This aligns with the principles of proactive risk management and sound corporate governance expected of financial institutions under ABC's purview. It emphasizes a holistic view, integrating qualitative and quantitative analysis to identify potential vulnerabilities and opportunities for enhancement, thereby ensuring the framework remains effective and resilient. Incorrect approaches analysis. An approach that focuses solely on historical data without considering emerging trends or future scenarios would be deficient. This fails to meet the dynamic nature of risk assessment and could leave the bank exposed to novel threats. It also neglects the forward-looking expectations embedded in regulatory guidance for risk management. An approach that prioritizes speed of implementation over thoroughness would be a significant regulatory and ethical failure. Rushing the assessment without adequate due diligence increases the likelihood of overlooking critical control gaps, potentially leading to breaches of regulatory requirements and increased operational risk. This demonstrates a lack of professional diligence. An approach that relies exclusively on external benchmarks without internal validation would also be problematic. While benchmarks offer valuable insights, they do not account for the unique operational context, risk appetite, and specific business strategies of the Agricultural Bank of China. This can lead to the adoption of inappropriate controls or an underestimation of internal risks, violating the principle of tailored risk management. Professional reasoning. Professionals should adopt a structured, multifaceted approach to risk assessment. This involves understanding the specific regulatory landscape governing the Agricultural Bank of China, identifying current and emerging risks, evaluating the effectiveness of existing controls, and projecting the framework's resilience under various stress scenarios. The process should be iterative, incorporating feedback and continuous monitoring to ensure ongoing adequacy and compliance. Decision-making should be guided by a commitment to sound governance, ethical conduct, and the long-term stability and integrity of the institution. Question 8. The risk matrix shows a new wealth management product with several high-impact, low-probability risks, alongside moderate-impact, moderate-probability risks. Considering the Agricultural Bank of China's stated risk appetite for innovation balanced with stability, which of the following approaches best guides the decision on whether to launch this product? Option A. Focus primarily on the risks with the highest probability of occurrence, as these are the most likely to materialize and require immediate attention, potentially deferring the assessment of lower probability, high-impact risks. Option B. Conduct a thorough qualitative analysis of the high-impact risks to understand their root causes and potential cascading effects, and assess the bank's existing control environment and mitigation strategies for their effectiveness in managing these specific risks, alongside a review of the moderate risks. Option C. Rely heavily on the historical performance data of similar products launched by other banks, assuming that the risk profile of this new product will be largely predictable based on past market behavior. Option D. Prioritize the launch of the product if the potential revenue generated by the moderate impact risks significantly outweighs the potential losses from the high-impact, low-probability risks, assuming these are rare events. The correct answer is B. Conduct a thorough qualitative analysis of the high-impact risks to understand their root causes and potential cascading effects, and assess the bank's existing control environment and mitigation strategies for their effectiveness in managing these specific risks, alongside a review of the moderate risks. Explanation. This scenario presents a professional challenge because it requires the assessment of a new product's risk profile within the context of the Agricultural Bank of China's, ABC, existing risk appetite and regulatory environment. The challenge lies in moving beyond a purely quantitative assessment, which is avoided here, to a qualitative and strategic evaluation of how this new product aligns with ABC's risk tolerance, operational capabilities, and the broader regulatory expectations for financial institutions in China. The need for deep analysis stems from the potential for unforeseen consequences, reputational damage, and regulatory noncompliance if the risk assessment is superficial or biased. The correct approach represents best professional practice because it involves a comprehensive, forward-looking evaluation that integrates qualitative factors with the quantitative data presented in the risk matrix. This approach prioritizes understanding the asterisk implications asterisk of the identified risks, not just their magnitude. It aligns with the principles of prudent risk management expected of financial institutions under Chinese banking regulations, which emphasize robust internal controls, adherence to risk appetite frameworks, and proactive identification and mitigation of emerging risks. This holistic view ensures that the decision to proceed with the product is informed by a thorough understanding of its potential impact on the bank's financial health, operational stability, and reputation, all within the bounds of regulatory compliance. An incorrect approach that focuses solely on the highest-rated risks without considering their interconnectedness or the bank's capacity to manage them fails to grasp the dynamic nature of risk. This could lead to a situation where the bank is exposed to significant, unmitigated threats. Another incorrect approach that prioritizes potential revenue over identified risks neglects the fundamental principle of risk management, which is to protect the institution's capital and stability. This is a direct contravention of regulatory expectations that banks operate with prudence and safeguard depositor funds. An approach that relies solely on historical data without considering the unique characteristics of the new product or potential future market shifts is also flawed. This static view can lead to underestimation of novel risks and a failure to adapt to evolving circumstances, potentially violating regulatory requirements for forward-looking risk assessment. Professionals should employ a decision-making framework that begins with clearly defining the risk appetite and strategic objectives. This is followed by a thorough identification and assessment of all relevant risks, considering both quantitative and qualitative factors. Crucially, the framework must include an evaluation of the bank's capacity to manage these risks, the effectiveness of proposed mitigation strategies, and the potential impact on all stakeholders. Finally, decisions should be made with a clear understanding of the regulatory landscape and ethical consideration, ensuring transparency and accountability. Question 9. Assessment of the most appropriate methodology for evaluating the potential impact of a new regulatory directive on the Agricultural Bank of China's loan portfolio, considering its implications for credit risk and capital adequacy. Option A. Relying solely on historical performance data of the loan portfolio to project future risk levels. Option B. Performing a qualitative assessment based on the general opinions of senior management regarding regulatory impact. Option C. Conducting a scenario analysis that models the impact of specific regulatory changes on key risk drivers within the loan portfolio. Option D. Assuming current risk management models are adequate without specific adjustments for the new directive. The correct answer is C. Conducting a scenario analysis that models the impact of specific regulatory changes on key risk drivers within the loan portfolio. Explanation. Scenario analysis. This scenario presents a challenge in risk assessment by requiring the identification of the most appropriate method for evaluating the potential impact of a new regulatory change on the Agricultural Bank of China's ABC loan portfolio. The difficulty lies in selecting a method that is both comprehensive and practical, considering the dynamic nature of financial markets and regulatory environments. Professionals must balance the need for thoroughness with the constraints of time and resources. Correct approach analysis. The correct approach involves a scenario analysis that models the impact of specific regulatory changes on key risk drivers within the loan portfolio. This method is best professional practice because it directly addresses the potential consequences of the new regulation by simulating various outcomes. It allows ABC to quantify potential losses, assess capital adequacy under different stress conditions, and develop targeted mitigation strategies. This aligns with the principles of prudent risk management and regulatory compliance, ensuring that the bank is prepared for potential adverse effects. Incorrect approaches analysis. One incorrect approach focuses solely on historical data without incorporating the forward-looking impact of the new regulation. This fails to account for how the regulatory change might alter future risk profiles, leading to an incomplete and potentially misleading assessment. It violates the principle of proactive risk management by relying on past performance as a sole predictor of future outcomes, which is insufficient when a significant new factor like a regulatory change is introduced. Another incorrect approach involves a qualitative assessment based on expert opinion alone, without quantitative modeling. While expert judgment is valuable, relying solely on it for a significant regulatory impact assessment can lead to subjective biases and a lack of concrete data to support decision-making. This approach may not satisfy regulatory expectations for robust risk assessment and can be difficult to audit or defend. A third incorrect approach is to assume that existing risk management frameworks are sufficient without specific testing for the new regulation. This overlooks the possibility that the new regulation may introduce novel risks or exacerbate existing ones in ways not currently captured by the bank's models. It represents a failure to adapt risk management practices to evolving external factors, which is a fundamental requirement for maintaining financial stability and compliance. Professional reasoning. Professionals should approach this situation by first understanding the specific details and potential implications of the new regulation. They should then consider various risk assessment methodologies, evaluating their suitability based on the nature of the regulation, the available data, and the bank's risk appetite. A structured approach involving scenario analysis, stress testing, and expert consultation, integrated with quantitative modeling, provides the most robust assessment. This process ensures that the bank can identify, measure, and manage the risks associated with the regulatory change effectively, thereby safeguarding its financial health and meeting its compliance obligations. Question 10. Comparative studies suggest that when evaluating the credit risk implications of a new digital lending platform for a major financial institution like the Agricultural Bank of China, which of the following methodologies would be most effective in providing a robust and forward-looking assessment? Option A. The adoption of a standardized, generic risk assessment template that has been applied to other types of financial products without specific adaptation for digital lending. Option B. A comprehensive risk assessment that integrates quantitative modeling of potential default scenarios, qualitative analysis of the platform's underwriting and collection processes, and an evaluation of the new customer segment's risk profiles, benchmarked against emerging trends in digital finance within China. Option C. A reliance on historical credit performance data from ABC's traditional branch-based lending operations, assuming similar risk characteristics will apply to the digital platform. Option D. A primary focus on the technological infrastructure and cybersecurity measures of the digital platform, with credit risk assessment being a secondary consideration. Correct answer is B. A comprehensive risk assessment that integrates quantitative modeling of potential default scenarios, qualitative analysis of the platform's underwriting and collection processes, and an evaluation of the new customer segment's risk profiles, benchmarked against emerging trends in digital finance within China. Explanation: scenario analysis. This scenario presents a challenge in risk assessment by requiring the identification of the most appropriate methodology for evaluating the potential impact of a new digital lending platform on the Agricultural Bank of China's ABC credit risk profile. The complexity arises from the inherent uncertainties of new technologies, evolving customer behaviors, and the need to align risk assessment with ABC's strategic objectives and regulatory expectations within the Chinese financial sector. A robust risk assessment is crucial to prevent potential financial losses, ensure compliance, and maintain the bank's stability. Correct approach analysis. The correct approach involves a comprehensive, forward-looking assessment that integrates quantitative and qualitative factors specific to digital lending. This includes analyzing historical data from similar digital products, if available, modeling potential default scenarios based on new customer segments and loan characteristics, and evaluating the effectiveness of the platform's internal controls and fraud detection mechanisms. This approach aligns with the principles of prudent risk management expected by the China Banking and Insurance Regulatory Commission, CBIRC, and emphasizes proactive identification and mitigation of emerging risks, thereby safeguarding the bank's financial health and operational integrity. Incorrect approaches analysis. One incorrect approach would be to solely rely on historical data from ABC's traditional lending operations, without adjusting for the unique characteristics of digital lending. This fails to account for potentially different risk profiles of digitally acquired customers, the speed and scale of digital transactions, and the novel fraud vectors associated with online platforms. Such an approach would lead to an underestimation of credit risk and a failure to implement appropriate mitigation strategies, potentially violating regulatory requirements for comprehensive risk assessment. Another incorrect approach would be to focus exclusively on the technological aspects of the platform, such as system uptime and cybersecurity, while neglecting the underlying credit risk assessment of the borrowers and loan products. While operational risks are important, the primary concern for a lending platform is credit risk. Overlooking this fundamental aspect would be a significant regulatory and ethical failure, as it would not fulfill the bank's core responsibility of managing credit exposures prudently. A third incorrect approach would be to adopt a generic, one-size-fits-all risk assessment framework, without tailoring it to the specific context of ABC and the Chinese financial market. This would fail to consider the unique regulatory landscape, economic conditions, and customer demographics relevant to ABC's operations. Such a superficial assessment would not provide actionable insights for effective risk management and could lead to non-compliance with specific CBIRC guidelines on digital finance. Professional reasoning. Professionals should approach this situation by first understanding the strategic intent behind the digital lending platform and its potential impact on ABC's overall risk appetite. They should then identify the key risk drivers specific to digital lending, such as customer acquisition channels, underwriting algorithms, loan performance monitoring, and collection processes. A structured risk assessment process, incorporating scenario analysis, stress testing, and expert judgment, should be employed. This process should be iterative, allowing for adjustments as more information becomes available and as the platform's performance is observed. Continuous monitoring and review are essential to adapt to evolving risks and ensure ongoing compliance with regulatory expectations. Question 11. Risk assessment procedures indicate that a client has verbally expressed a moderate risk tolerance, but their recent investment inquiries have consistently focused on high-yield, speculative products, and they have expressed discomfort with even minor market downturns. Which of the following approaches best aligns with regulatory expectations for client suitability and prudent advice? Option A. Conduct a follow-up discussion with the client to explore the discrepancy between their stated risk tolerance and their investment interests, using scenario-based questions to gauge their reaction to potential losses and gains, and document the findings to inform future recommendations. Option B. Proceed with recommending a portfolio that aligns with the client's stated moderate risk tolerance, assuming their inquiries about speculative products were merely exploratory and not indicative of their true investment strategy. Option C. Prioritize the client's expressed interest in high-yield products, assuming their stated moderate risk tolerance was a temporary sentiment influenced by recent market volatility, and recommend a more aggressive investment strategy. Option D. Inform the client that their investment interests are inconsistent with their stated risk tolerance and refuse to offer advice until they provide a definitive risk profile, without further exploration. The correct answer is A. Conduct a follow-up discussion with the client to explore the discrepancy between their stated risk tolerance and their investment interests, using scenario-based questions to gauge their reaction to potential losses and gains, and document the findings to inform future recommendations. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a client's stated risk tolerance and their actual investment behavior. The challenge lies in discerning whether the client's stated preference is a genuine reflection of their comfort with risk or a superficial response influenced by recent market sentiment or a misunderstanding of investment principles. A financial advisor must navigate this discrepancy ethically and professionally, ensuring that investment recommendations align with the client's true financial well-being and regulatory obligations, rather than simply accepting the client's initial declaration. Correct approach analysis. The correct approach demonstrates best professional practice by prioritizing a thorough, ongoing assessment of the client's risk profile. This involves not just initial questionnaires, but also observing actual investment decisions, engaging in detailed discussions about potential losses and gains, and considering the client's financial situation and investment objectives. This aligns with the Agricultural Bank of China's regulatory framework, which emphasizes client suitability and prudent advice. It ensures that recommendations are not only technically sound, but also ethically appropriate, safeguarding the client's interests and upholding the bank's reputation. This proactive and dynamic approach to risk assessment is crucial for maintaining client trust and adhering to principles of responsible financial intermediation. Incorrect approach is analysis. One incorrect approach involves solely relying on the client's initial stated risk tolerance without further verification or observation. This fails to meet the regulatory requirement for a comprehensive understanding of the client's risk profile, potentially leading to unsuitable investment recommendations. It also represents an ethical lapse by not acting in the client's best interest, as their stated tolerance might not reflect their true capacity or willingness to bear risk. Another incorrect approach is to override the client's stated risk tolerance based on the advisor's personal judgment without a clear, documented, and justifiable rationale that is communicated to the client. While an advisor may have expertise, unilaterally disregarding a client's stated preference without a robust process can lead to disputes and regulatory scrutiny. It undermines the principle of client autonomy and can be seen as a failure to adequately document the suitability assessment. A third incorrect approach is to prioritize the client's desire for high returns above all else, even if it contradicts their stated risk tolerance. This approach is fundamentally flawed as it prioritizes potential profit over risk management and client protection, directly contravening regulatory guidelines that mandate suitability and risk appropriateness. It exposes both the client and the bank to undue risk and potential noncompliance. Professional reasoning. Professionals should adopt a systematic and iterative approach to client risk assessment. This involves 1. Initial comprehensive assessment using multiple methods, questionnaires, discussions. 2. Ongoing monitoring of client behavior and market conditions. 3. Regular reevaluation of the risk profile, especially after significant market events or changes in the client's circumstances. 4. Clear and transparent communication with the client about their risk profile, investment recommendations, and the rationale behind them. 5. Robust documentation of all assessments and decisions. This framework ensures that advice remains suitable, ethical, and compliant with regulatory expectations. Question 12. To address the challenge of a client expressing a strong desire to invest in a specific, potentially complex financial product that may not align with their stated financial goals and risk tolerance, what is the most appropriate course of action for a relationship manager at the Agricultural Bank of China? Option A. Focus on the potential commission and revenue generated by the requested product, emphasizing its benefits to the client without delving into detailed risk assessments. Option B. Immediately process the client's requested investment, prioritizing client satisfaction and the potential for immediate transaction volume. Option C. Conduct a comprehensive assessment of the client's financial situation, investment objectives, risk tolerance, and understanding of the product's features and risks before making any recommendation or proceeding with the transaction. Option D. Politely decline the client's request and unilaterally recommend a different, more conservative product without further discussion about their initial preference. The correct answer is C. Conduct a comprehensive assessment of the client's financial situation, investment objectives, risk tolerance, and understanding of the product's features and risks before making any recommendation or proceeding with the transaction. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a client's stated desire for a specific investment product and the bank's fiduciary duty to ensure suitability. The challenge lies in discerning whether the client's request is genuinely informed and aligned with their financial objectives and risk tolerance, or if it stems from a misunderstanding, external influence, or a misaligned perception of their own capabilities. Agricultural Bank of China's regulatory framework emphasizes client protection and responsible financial advice, requiring employees to act in the best interests of the client, even when it contradicts a client's immediate request. Correct approach analysis. The correct approach demonstrates best professional practice by prioritizing a thorough client needs assessment and suitability evaluation before proceeding with the investment. This aligns with the principles of Know Your Customer, KIC, and suitability, which are fundamental to responsible financial advisory services under Chinese banking regulations. By engaging in a detailed discussion about the client's financial goals, risk tolerance, investment horizon, and understanding of the product's complexities, the relationship manager fulfills their duty of care. This proactive approach ensures that any recommended product, including the one requested by the client, is genuinely appropriate for their circumstances, thereby mitigating potential risks for both the client and the bank and upholding ethical standards. Incorrect approaches analysis. One incorrect approach involves immediately fulfilling the client's request without further inquiry. This fails to meet the regulatory requirement of assessing suitability. It prioritizes client satisfaction over client well-being and exposes the client to potential financial harm if the product is not appropriate. Ethically, it breaches the duty of care and could be construed as facilitating a potentially detrimental financial decision. Another incorrect approach is to dismiss the client's request outright and steer them towards a different product without understanding the rationale behind their initial preference. While the intention might be to guide them to a more suitable option, this approach lacks respect for client autonomy and can damage the client relationship. It also fails to explore whether the client's initial request could be met with appropriate risk mitigation or education, thus missing an opportunity for informed client decision-making. A third incorrect approach is to focus solely on the potential commission or revenue generated by the requested product, disregarding its suitability. This is a clear violation of ethical principles and regulatory guidelines that mandate acting in the client's best interest. Such behavior prioritizes profit over client welfare and can lead to severe regulatory penalties and reputational damage for the bank. Professional reasoning. Professionals should adopt a structured decision-making process that begins with understanding the client's stated needs and then rigorously assessing their underlying financial situation, objectives, and risk profile. This involves active listening, probing questions, and a thorough review of relevant client information. If a client's request appears misaligned with their profile, the professional's duty is to educate the client about the risks and benefits, explore alternatives, and ensure that any decision is fully informed and in the client's best interest, adhering strictly to the bank's internal policies and relevant regulatory frameworks. Question 13. The evaluation methodology shows that assessing the effectiveness of a new operational risk management framework at Agricultural Bank of China requires a comprehensive approach. Which of the following methodologies best demonstrates best practice in this assessment? Option A. A thorough review of the framework's documented policies and procedures, cross-reference with relevant internal circulars and regulatory guidelines from the People's Bank of China and the China Banking and Insurance Regulatory Commission. Option B. A review of the framework's theoretical design and its alignment with international best practices in operational risk management, assuming its practical application will mirror its design. Option C. a detailed examination of the framework's documented policies and procedures, supplemented by on-site observation of control implementation and interviews with key personnel responsible for its execution. Option D, an analysis of the self-assessment reports submitted by business units regarding their adherence to the new framework, focusing on aggregated risk indicators. The correct answer is A thorough review of the framework's documented policies and procedures, cross-referenced with relevant internal circulars and regulatory guidelines from the People's Bank of China and the China Banking and Insurance Regulatory Commission. Explanation: scenario analysis. This scenario presents a professional challenge in assessing the effectiveness of a new risk management framework within Agricultural Bank of China, ABC. The challenge lies in moving beyond a superficial review of documentation to a substantive evaluation of how the framework is actually implemented and its impact on operational risk mitigation. It requires the assessor to exercise critical judgment, considering both the stated intentions of the framework and the practical realities of its application within the bank's specific business context. The potential for misinterpreting the effectiveness of controls or for overlooking emergent risks not explicitly covered by the framework necessitates a thorough and nuanced approach. Correct approach analysis. The correct approach emphasizes a multifaceted evaluation that integrates documentation review with on-the-ground observation and stakeholder interviews. This aligns with best practices in internal audit and risk management, which advocate for a comprehensive understanding of control environments. Specifically, it reflects the principles of effective risk assessment and control testing as expected within a regulated financial institution like ABC. By examining the framework's practical application, the assessor can verify its operational effectiveness, identify gaps, and provide actionable recommendations. This approach is crucial for ensuring compliance with ABC's internal policies and any relevant People's Bank of China, PBOC, or China Banking and Insurance Regulatory Commission, CBIRC, guidelines concerning risk management and operational resilience, which mandate robust and demonstrably effective risk management systems. Incorrect approaches analysis, focusing solely on the documented policies and procedures without verifying their implementation, represents a significant regulatory and ethical failure. This approach risks providing a misleading assurance of control effectiveness, potentially masking underlying weaknesses that could lead to operational failures or non-compliance. It fails to meet the expectation of due diligence and professional skepticism required of internal auditors and risk professionals. Relying exclusively on the self-assessment reports provided by the business units is also problematic. While self-assessments are a component of risk management, they are inherently subjective and may be influenced by a desire to present a favorable picture. This approach bypasses the independent verification necessary for objective assurance and could lead to the overlooking of critical control deficiencies, violating the principles of independent oversight mandated by regulatory bodies. Assuming that the framework's theoretical design guarantees its practical effectiveness without any form of validation is a fundamental flaw. This demonstrates a lack of professional rigor and an abdication of the responsibility to ensure that risk management practices are not just present, but are actively and effectively functioning to protect the bank and its stakeholders. This oversight could lead to significant operational losses or reputational damage, which would be viewed as a failure to adhere to prudent banking practices. Professional reasoning. Professionals should adopt a systematic approach that begins with understanding the objectives and design of the risk management framework. This should be followed by a detailed review of relevant documentation, including policies, procedures, and previous audit reports. Crucially, this must be complemented by substantive testing, which includes observing control activities in action, interviewing key personnel across different levels and departments, and analyzing data to identify trends or anomalies. The evaluation should be iterative, with findings from one stage informing the next. Professionals must maintain professional skepticism throughout the process, seeking corroborating evidence and challenging assumptions. When discrepancies arise between documented procedures and actual practice, further investigation is warranted to understand the root cause and assess the implications for risk exposure. The ultimate goal is to provide a realistic and objective assessment of the framework's effectiveness and to recommend improvements that enhance the bank's risk management capabilities and ensure compliance with regulatory expectations. Question 14. The risk matrix shows that a proposed new financial product has a moderate likelihood of market volatility and a moderate impact on operational efficiency. Which of the following represents the most prudent and compliant approach for the Agricultural Bank of China to take before approving the product for launch? Option A. Proceed with the product launch immediately to capture market share, with a plan to address any emerging risks reactively as they become apparent. Option B. Launch the product after a brief internal discussion, focusing primarily on the projected revenue generation and assuming that the risk matrix provides sufficient oversight. Option C. Conduct a comprehensive due diligence process involving all relevant departments, including risk management, compliance, and legal, to thoroughly assess the identified risks, evaluate proposed mitigation strategies, and ensure alignment with regulatory requirements and the bank's risk appetite. Option D. Approve the product based on the moderate risk rating in the matrix, assuming that the potential profitability outweighs the identified risks. Correct answer is C. Conduct a comprehensive due diligence process involving all relevant departments, including risk management, compliance, and legal, to thoroughly assess the identified risks, evaluate proposed mitigation strategies, and ensure alignment with regulatory requirements and the bank's risk appetite. Explanation. Scenario analysis. This scenario presents a common challenge in financial institutions where a new product, while potentially profitable, carries inherent risks that need careful evaluation against the bank's risk appetite and regulatory obligations. The challenge lies in balancing the drive for innovation and revenue generation with the imperative to maintain financial stability, protect customer interests, and comply with the Agricultural Bank of China's (ABC) internal policies and relevant Chinese financial regulations. The risk matrix, a key tool for risk assessment, highlights potential areas of concern, requiring a nuanced understanding of how these risks translate into actionable mitigation strategies. Correct approach analysis. The correct approach involves a comprehensive, multifaceted review that goes beyond the initial risk matrix assessment. It necessitates engaging relevant internal departments such as risk management, compliance, legal, and product development. This collaborative process ensures that all potential risks, market, credit, operational, compliance, reputational, are thoroughly understood and assessed in the context of the specific product and its target market. The approach should also consider the adequacy of proposed internal controls, the clarity of product documentation for customers, and the alignment with ABC's strategic objectives and risk appetite framework. Crucially, it must ensure adherence to all applicable Chinese banking regulations, including those related to new product approvals, consumer protection, and anti-money laundering. This holistic and integrated review process represents best professional practice because it embodies a proactive and responsible approach to risk management, safeguarding the bank's interests and its customers. It demonstrates a commitment to regulatory compliance and ethical conduct by ensuring that risks are identified, understood, and managed before a product is launched. Incorrect approaches analysis. Proceeding with the product launch solely based on the risk matrix's indication of moderate risk without further due diligence is a significant regulatory and ethical failure. The risk matrix is a preliminary tool. It does not absolve the bank from conducting a deeper investigation into the nature and severity of identified risks. This approach ignores the potential for moderate risks to escalate or to have unforeseen consequences, potentially violating the principle of prudent risk management mandated by Chinese financial regulators. Launching the product immediately to capitalize on market opportunity, with a plan to address risks as they arise, is a severe ethical and regulatory lapse. This reactive stance is fundamentally at odds with the proactive risk management requirements of Chinese banking law and ABC's internal policies. It exposes the bank to significant financial, reputational, and legal risks, potentially leading to regulatory sanctions and customer harm. Focusing exclusively on the potential profitability of the new product, while acknowledging the risks but deeming them acceptable due to the expected returns, is a dangerous and non-compliant approach. This prioritization of profit over prudent risk management and regulatory adherence is a direct violation of the fiduciary duties of bank management and the spirit of Chinese financial regulation, which emphasizes stability and consumer protection. It suggests a disregard for the potential negative impacts on the bank's financial health and its stakeholders. Professional reasoning. Professionals should adopt a structured decision-making process that begins with a thorough understanding of the regulatory landscape and the institution's internal risk appetite. When evaluating new products or initiatives, the process should involve 1. Initial risk identification and assessment, e.g., using a risk matrix. 2. Deep dive analysis of identified risks involving cross-functional teams. 3. Evaluation of proposed mitigation strategies and control frameworks. 4. Assessment of compliance with all relevant laws, regulations, and internal policies. 5. Consideration of reputational impact and customer protection. 6. Formal approval by designated authorities within the bank, based on comprehensive risk-benefit analysis and adherence to regulatory requirements. This systematic approach ensures that decisions are informed, responsible, and aligned with both business objectives and regulatory mandates. Question 15. The audit findings indicate that while the Agricultural Bank of China has implemented various technical safeguards for customer data, there are inconsistencies in employee adherence to data handling protocols and a lack of regular, comprehensive risk assessments specifically targeting emerging cyber threats. Which of the following approaches best addresses these findings in accordance with the People's Bank of China's regulatory framework for information security and data protection? Option A. Conduct a thorough review and update of all data handling policies, reinforce mandatory and regular employee training programs on data privacy and security best practices, and establish a recurring schedule for comprehensive cybersecurity risk assessments and penetration testing. Option B. Immediately implement a new, advanced encryption software across all systems and conduct a one-time training session for IT staff on its deployment. Option C. Allocate additional budget for external cybersecurity consultants to perform an immediate, high-level scan of the bank's network for vulnerabilities, without altering existing internal procedures. Option D. Focus on enhancing the bank's public relations efforts to reassure customers about data security, while deferring any significant changes to internal protocols until a more opportune time. The correct answer is B. Immediately implement a new, advanced encryption software across all systems and conduct a one-time training session for IT staff on its deployment. Explanation: the audit findings indicate a potential breakdown in the Agricultural Bank of China's internal controls related to customer data privacy and information security. This scenario is professionally challenging because it requires balancing the bank's operational needs with stringent regulatory obligations and ethical responsibilities towards its customers. The rapid evolution of technology and the increasing sophistication of cyber threats necessitate constant vigilance and adaptation of security protocols. A failure in this area can lead to severe reputational damage, significant financial penalties, and erosion of customer trust. The correct approach, which involves a comprehensive review and enhancement of data security policies and employee training, represents best professional practice because it directly addresses the root causes of the audit findings. This proactive stance aligns with the People's Bank of China, PBOC, regulations and the cybersecurity law of the People's Republic of China, which mandate robust data protection measures, risk assessments, and ongoing staff education. Implementing a multi-layered security strategy, including encryption, access controls, and regular vulnerability testing, demonstrates a commitment to safeguarding sensitive customer information, thereby upholding the bank's fiduciary duty and regulatory compliance. An incorrect approach that focuses solely on immediate technical fixes without addressing underlying procedural weaknesses is professionally unacceptable. This would likely violate the spirit, if not the letter, of regulations requiring a holistic approach to information security management. Such an approach might also fail to comply with the PBOC guidelines on risk management, which emphasize the importance of identifying and mitigating systemic vulnerabilities. Another incorrect approach, which involves downplaying the audit findings to avoid immediate disruption or cost, represents a significant ethical and regulatory failure. This demonstrates a lack of commitment to customer protection and regulatory adherence, potentially leading to more severe consequences down the line. It contravenes the principles of good corporate governance and the legal obligations to maintain secure and reliable financial systems. The professional decision-making process for similar situations should involve a thorough understanding of the relevant regulatory landscape, including the cybersecurity law and PBOK directives. It requires a risk-based assessment to prioritize remediation efforts, focusing on areas with the highest potential impact. Furthermore, it necessitates fostering a culture of compliance and security awareness throughout the organization, ensuring that all employees understand their roles and responsibilities in protecting customer data. This involves regular training, clear communication of policies, and mechanisms for reporting and addressing security concerns. Question 16. Consider a scenario where a long-standing and reputable corporate client of the Agricultural Bank of China, ABC, requests a series of rapid, sequential international wire transfers to multiple newly established offshore entities. The total value of these transfers, while individually within the client's typical transaction range, is significant when aggregated over a short period. The relationship manager is aware of the client's legitimate business operations, but has no specific information about the purpose of these offshore entities or the underlying transactions. What is the most appropriate course of action for the relationship manager? Option A. Immediately process the wire transfers as requested, given the client's long-standing positive relationship with the bank and the absence of explicit red flags. Option B. Escalate the request to the bank's anti-money laundering (AML) compliance department for review and guidance before proceeding with the transactions. Option C. Inform the client that their request cannot be fulfilled due to the unusual nature of the transactions and suggest they find another banking partner. Option D. Directly question the client about the specific business purpose of each offshore entity and the nature of the underlying transactions, demanding detailed documentation upfront. The correct answer is A. Immediately process the wire transfers as requested, given the client's long-standing positive relationship with the bank and the absence of explicit red flags. Explanation. This scenario presents a professional challenge rooted in balancing client interests with the bank's internal policies and regulatory obligations. The core difficulty lies in discerning when a client's request, while seemingly straightforward, might inadvertently lead to a breach of anti-money laundering (AML) regulations or internal control procedures designed to prevent financial crime. The need for careful judgment arises from the potential for reputational damage, legal penalties, and erosion of trust if the bank fails to adequately scrutinize such transactions. The correct approach represents best professional practice because it prioritizes due diligence and adherence to the Agricultural Bank of China's (ABC) established AML and Know Your Customer (KIC) policies. This involves escalating the situation to the relevant compliance department for expert review. This action is justified by ABC's internal regulations and the People's Bank of China (PBOK) guidelines on anti-money laundering, which mandate that suspicious or unusual transactions, regardless of client intent, must be flagged and investigated. By seeking guidance from the compliance department, the relationship manager demonstrates a commitment to regulatory compliance and responsible banking, safeguarding both the client and the institution. An incorrect approach that involves directly facilitating the transaction without further inquiry fails to uphold ABC's AML/KYC obligations. This would be a direct violation of internal policies and potentially PBOK regulations, as it bypasses the necessary scrutiny for unusual transaction patterns. Another incorrect approach, such as dismissing the client's request as a minor inconvenience and proceeding without proper documentation or escalation, ignores the potential for illicit activity and exposes the bank to significant risk. This demonstrates a lack of professional diligence and a disregard for the bank's compliance framework. A third incorrect approach, which involves questioning the client's motives directly and confrontationally, could damage the client relationship unnecessarily and might not yield the necessary information for a proper compliance assessment. It also risks alerting a potentially illicit actor without having the proper channels for reporting in place. The professional decision-making process for similar situations should involve a systematic approach. First, understand the client's request and its context. Second, assess the request against ABC's internal policies and relevant PBOK regulations, particularly those concerning AML and KYC. Third, if any aspect of the request appears unusual, complex, or potentially indicative of illicit activity, escalate the matter to the designated compliance or risk management department for expert evaluation and guidance. Fourth, document all interactions and decisions thoroughly. This structured approach ensures that client needs are considered while upholding the bank's commitment to regulatory compliance and ethical conduct. Question 17. The investigation demonstrates that a long-standing client of the Agricultural Bank of China has raised concerns about unusual activity on their account, citing a series of transactions that they do not recognize. The client is distressed and requests immediate clarification and resolution. The bank's initial review shows some transactions that appear to be outside the client's typical spending patterns, but no definitive evidence of fraud or illicit activity has yet been established. What is the most appropriate course of action for the Agricultural Bank of China to take in this situation? Option A. Share the transaction details with other clients who have reported similar concerns to see if a pattern emerges. Option B. Acknowledge the client's concerns, assure them that the matter is being taken seriously, and commence a thorough investigation by gathering all relevant transaction details, client history, and consulting with the bank's compliance and risk management departments before taking any further action. Option C. Immediately freeze the client's account to prevent further unauthorized transactions and initiate a formal investigation. Option D. Advise the client that such issues are common and suggest they monitor their account closely, without initiating a formal investigation unless further suspicious activity is reported. The correct answer is C. Immediately freeze the client's account to prevent further unauthorized transactions and initiate a formal investigation. Explanation. This scenario presents a professional challenge due to the inherent conflict between the bank's need to manage risk and the potential for a client to perceive a lack of responsiveness or understanding. The Agricultural Bank of China operates within a regulatory environment that emphasizes both financial stability and customer protection. Therefore, a careful balance must be struck when addressing client concerns, particularly those that might indicate a deviation from expected financial behavior or potential compliance issues. The correct approach represents best professional practice because it prioritizes a thorough, fact-based investigation before making any decisions. This aligns with the principles of due diligence and responsible banking, which are fundamental to maintaining client trust and adhering to regulatory expectations for risk management and anti-money laundering AML frameworks. By gathering all relevant information and consulting with appropriate internal departments, the bank ensures that its actions are informed, justified, and compliant with the Agricultural Bank of China's internal policies and relevant Chinese financial regulations. This methodical process minimizes the risk of erroneous decisions that could harm the client or expose the bank to regulatory penalties. An incorrect approach that immediately freezes the client's account without sufficient evidence would be a significant regulatory and ethical failure. Such an action could violate customer rights and potentially contravene regulations governing account operations and dispute resolution. It demonstrates a lack of due process and could lead to reputational damage and legal repercussions. Another incorrect approach, such as dismissing the client's concerns without proper investigation, ignores potential red flags that could indicate illicit activities or significant financial distress, thereby failing in the bank's duty of care and its AML/CFT, combating the financing of terrorism obligations. Finally, an approach that involves sharing sensitive client information with unauthorized personnel would be a severe breach of data privacy regulations and internal bank policies, leading to severe penalties and loss of client confidence. Professionals should employ a structured decision-making process that begins with understanding the nature of the client's concern. This involves active listening, gathering all pertinent documentation, and identifying potential risks or compliance issues. The next step is to consult internal policies and relevant regulations to determine the appropriate course of action. If further investigation is required, it should be conducted promptly and impartially. Collaboration with relevant departments, such as compliance, risk management, and legal, is crucial for ensuring a comprehensive and compliant response. The final decision should be well documented and communicated clearly to the client, adhering to all regulatory disclosure requirements. Question 18. Upon reviewing a client's request for a specific high-yield investment product, which the client states is based on a recommendation from a friend, what is the most appropriate next step for an Agricultural Bank of China relationship manager to take, considering the bank's obligations under Chinese financial regulations? Option A. Advise the client that the requested product is too risky and suggest a government bond fund instead, without further discussion. Option B. Explain the potential for higher returns on the requested product and process the transaction promptly to meet the client's immediate interest. Option C. Conduct a thorough assessment of the client's financial situation, investment objectives, and risk tolerance to determine if the requested product is suitable. Option D. Immediately proceed with recommending the high-yield product, as the client has explicitly requested it, and it is a product the bank offers. The correct answer is C. Conduct a thorough assessment of the client's financial situation, investment objectives, and risk tolerance to determine if the requested product is suitable. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a client's expressed desire for a specific investment strategy and the bank's fiduciary duty to ensure that strategy is suitable and aligned with the client's risk tolerance, financial situation, and investment objectives. The challenge lies in balancing client autonomy with the imperative of responsible financial advice, particularly within the regulatory landscape governing financial institutions in China. Correct approach analysis. The correct approach demonstrates best professional practice by prioritizing a thorough understanding of the client's financial profile and investment goals before recommending any product. This aligns with the principles of Know Your Customer, KIC, and suitability requirements mandated by the People's Bank of China, PBOC, and the China Banking and Insurance Regulatory Commission, CBIRC, guidelines. These regulations emphasize that financial institutions must act in the best interests of their clients, ensuring that any product or service offered is appropriate for the client's circumstances. A comprehensive assessment prevents mis-selling and protects both the client and the institution from potential regulatory breaches and reputational damage. Incorrect approaches analysis. Recommending the product immediately without further inquiry fails to adhere to the suitability requirements. This approach prioritizes sales targets over client welfare, potentially exposing the client to undue risk and violating regulatory mandates that require a thorough assessment of client needs and risk appetite. Such an action could be construed as mis-selling, leading to regulatory penalties. Suggesting a more conservative product. Without understanding the client's specific reasons for seeking the higher-risk option, disregards the client's stated objectives. While a conservative approach might seem safer, it fails to meet the client's expressed investment goals and could lead to dissatisfaction if the client believes their preferences were ignored. This also bypasses the crucial step of understanding the client's risk tolerance in relation to their stated goals. Focusing solely on the potential for higher returns without a corresponding assessment of the associated risks is a direct violation of suitability principles. Financial advice must be balanced, presenting both potential benefits and drawbacks. Ignoring the risk aspect, especially when a client expresses interest in a product with inherently higher risk, is professionally negligent and breaches regulatory expectations for transparent and responsible financial guidance. Professional reasoning. Professionals should adopt a client-centric decision-making process. This involves actively listening to the client's stated needs and desires, but critically evaluating them against the client's actual financial capacity, risk tolerance, and overall investment objectives. A structured approach, including detailed client profiling, risk assessment, and clear communication of product features, benefits, and risks, is essential. When a client's stated preference appears misaligned with their profile, the professional's duty is to educate the client, explain the discrepancies, and guide them towards suitable options, rather than blindly following their initial request or imposing a different agenda. Question 19. Stakeholder feedback indicates that the implementation of the Agricultural Bank of China's new digital lending platform is encountering significant delays due to perceived conflicts between the platform's innovative features and existing regulatory compliance requirements. Specifically, concerns have been raised about the speed of data validation for new loan applications and the integration of advanced AI-driven credit scoring models, which some teams believe may not fully align with current interpretations of data privacy and risk assessment guidelines issued by the People's Bank of China and the China Banking and Insurance Regulatory Commission. What is the most appropriate approach for the project team to navigate these implementation challenges? Option A. Immediately halt all development on the AI credit scoring models and revert to traditional, manual credit assessment methods to ensure full compliance with all existing regulations before proceeding with any aspect of the digital lending platform. Option B. Focus solely on addressing the data validation speed concerns by implementing less stringent checks, and postpone the integration of the AI credit scoring models indefinitely until a clearer regulatory consensus is reached, even if this significantly compromises the platform's competitive advantage. Option C. Expedite the launch of the digital lending platform with the innovative features, assuming that the benefits of increased market share and customer acquisition will outweigh any potential minor regulatory noncompliance, which can be addressed retrospectively. Option D. Prioritize a phased rollout of the digital lending platform, starting with core functionalities and a limited customer segment, while concurrently engaging in proactive dialogue with regulatory bodies to clarify interpretations of relevant guidelines and seek approval for the AI credit scoring models. The correct answer is D. Prioritize a phased rollout of the digital lending platform, starting with core functionalities and a limited customer segment, while concurrently engaging in proactive dialogue with regulatory bodies to clarify interpretations of relevant guidelines and seek approval for the AI credit scoring models. Explanation: this scenario presents a challenge in balancing the need for robust internal controls with the imperative to foster innovation and adapt to evolving market demands. The Agricultural Bank of China, ABC, like any major financial institution, operates within a stringent regulatory environment governed by the People's Bank of China, PBOC, and the China Banking and Insurance Regulatory Commission, CBIRC. These bodies mandate strict adherence to risk management frameworks, data security protocols, and customer protection measures. The challenge lies in implementing these requirements without stifling the agility needed to develop and deploy new digital products and services that are crucial for maintaining competitiveness and meeting customer expectations. A rigid, overly cautious approach to implementation can lead to delays, missed opportunities, and ultimately, a failure to meet strategic objectives. Conversely, a lax approach risks regulatory noncompliance, reputational damage, and financial losses. The correct approach prioritizes a phased, risk-based implementation strategy that integrates regulatory compliance from the outset. This involves close collaboration between compliance, IT, and business units to identify potential risks associated with new digital initiatives and to design controls that mitigate these risks effectively. It also emphasizes continuous monitoring and adaptation, recognizing that the regulatory landscape and technological advancements are dynamic. This proactive and integrated approach ensures that new products and services are not only innovative, but also compliant and secure, aligning with the ABC's strategic goals and regulatory obligations. This aligns with the principles of sound banking practices and risk management expected by the PBOC and CBIRC. An incorrect approach that focuses solely on immediate cost reduction by bypassing thorough risk assessments and compliance checks would be professionally unacceptable. This failure to adequately identify and mitigate risks associated with new digital products could lead to breaches of data privacy regulations, such as those outlined by the Cyberspace Administration of China (CAC), or violations of consumer protection laws. Such an oversight would expose the ABC to significant fines, legal liabilities, and severe reputational damage. Another incorrect approach, which involves delaying the launch of new digital products until all potential risks are theoretically eliminated, demonstrates a lack of understanding of the competitive imperative and the practicalities of innovation. This overly cautious stance, while seemingly risk-averse, can lead to the ABC falling behind competitors, losing market share, and failing to meet customer needs, which itself can be viewed as a failure in prudent management and strategic execution. The professional decision-making process for similar situations should involve a structured risk assessment framework. This framework should identify potential regulatory, operational, and reputational risks associated with any new initiative. It should then involve cross-functional teams to develop mitigation strategies that are proportionate to the identified risks. Continuous engagement with compliance and legal departments is essential throughout the development and implementation lifecycle. Furthermore, professionals should adopt an agile mindset, allowing for iterative development and adaptation of controls as new information or regulatory changes emerge. This balanced approach ensures that innovation and compliance are not mutually exclusive, but rather complementary aspects of sound business practice. Question 20. Examination of the data shows that a new analytics project requires the processing of a large volume of customer transaction data by an external vendor based in a different province. The project timeline is aggressive, and the vendor has assured the project team that their standard data handling procedures are highly secure. The project manager is eager to proceed quickly to meet the deadline. What is the most appropriate course of action for the Agricultural Bank of China in this situation? Option A. Proceed with transferring the data to the vendor immediately, relying on their assurances of security and the urgency of the project to meet the deadline. Option B. Assume that the vendor's existing standard data handling agreements are sufficient and proceed with data transfer without further specific review of data protection clauses. Option C. Initiate a comprehensive risk assessment of the vendor's data security practices. Ensure contractual clauses explicitly address data protection and privacy requirements in accordance with Chinese regulations, and obtain all necessary internal approvals before transferring any data. Option D. Transfer only an anonymized subset of the data to the vendor, without conducting a formal risk assessment or obtaining specific contractual clauses. To expedite the process, the correct answer is C. Initiate a comprehensive risk assessment of the vendor's data security practices. Ensure contractual clauses explicitly address data protection and privacy requirements in accordance with Chinese regulations, and obtain all necessary internal approvals before transferring any data. Explanation. This scenario presents a professional challenge due to the inherent tension between the bank's need for efficient data processing and the stringent requirements for data privacy and security mandated by Chinese financial regulations. The Agricultural Bank of China, like all financial institutions operating in China, must adhere to laws such as the Cybersecurity Law of the People's Republic of China and relevant regulations issued by the People's Bank of China, PBOC, and the China Banking and Insurance Regulatory Commission, CBIRC. These regulations emphasize the protection of sensitive customer information and the secure handling of data, especially when it involves cross-border transfers or processing by third parties. The challenge lies in balancing operational efficiency with robust compliance, ensuring that any data handling process, particularly one involving external vendors, is fully compliant with all applicable laws and internal policies. The correct approach, which involves a thorough risk assessment and the implementation of robust data protection measures before engaging a third-party vendor, represents best professional practice. This aligns with the principles of data minimization, purpose limitation, and security by design, which are foundational to data protection regulations in China. By conducting due diligence on the vendor's security protocols, ensuring contractual clauses address data protection responsibilities, and obtaining necessary internal approvals, the bank demonstrates a commitment to regulatory compliance and safeguarding customer data. This proactive stance mitigates potential legal, financial, and reputational risks. An incorrect approach that bypasses the established risk assessment and approval process, such as proceeding with data sharing based solely on the vendor's assurances or the urgency of the project, constitutes a significant regulatory and ethical failure. This would violate the principles of due diligence and responsible data stewardship. Specifically, it could contravene provisions of the cybersecurity law requiring network operators to take measures to prevent data leakage and unauthorized access. Ethically, it demonstrates a disregard for customer privacy and the bank's fiduciary duty to protect sensitive information. Another incorrect approach, such as assuming that standard vendor agreements are sufficient without specific data protection clauses, fails to address the unique risks associated with financial data and could lead to breaches of contract and regulatory noncompliance. This overlooks the specific requirements for data processing and security outlined in Chinese financial regulations. The professional decision-making process for similar situations should involve a structured risk management framework. This includes identifying potential data privacy and security risks, evaluating the likelihood and impact of these risks, and implementing appropriate controls. When considering third-party engagement, a comprehensive vendor due diligence process is paramount. This should include reviewing the vendor's security certifications, data handling policies, and compliance history. Furthermore, clear contractual agreements that explicitly define data protection obligations, responsibilities, and liabilities are essential. Obtaining necessary internal approvals from compliance, legal, and IT security departments ensures that all stakeholders are aware of and agree to the proposed data handling arrangements, thereby fostering a culture of compliance and responsible data management.